When is the absolute best time to sell a specific card? If you're like me, this is a question you spend a lot of time and mental energy pondering. Look, we all want to make a great profit on our sports card investments, but just like getting close to a cliff, if we venture out too far, we fall off and die, and that is not good for anyone. So in this video, I want to share with you some perspective and my formula for how I determine when and how much I want to sell a card for based on several factors, as well as the principles I've learned from successful mentors I've had in the past. And it's not just sell for 2 times the price I paid for it. By going through this process, I've been able to make a healthy profit on my cards while keeping my level of risk low. And more importantly, I feel like I found a winning formula for long-term success. And that's something I want for you as well. Welcome back. Now let's get to work. First things first is that a lot of investors will just sell at a certain multiplier of what they paid, like 2x or 3x. Now that's a great rule of thumb, but I don't believe a basic multiplier is ideal because it does not factor in all these other things, like how many of the card do you have? What is that card's upside and downside? What about that player's upside and downside? What about opportunity cost, or all the things that you could be investing in by holding on to this card? And honestly, I'm sorry to say this, but not every card is gonna go up 2x. I bet there are a lot of investors out there waiting for Greg Oden to make his long-awaited return to the NBA so they could still sell his rookie cards at 2 times the price they paid for it. Now let's start with the price range of a card. The lower you pay for the card, the more of a return percentage-wise you would want to expect back. For example, if you bought a $2 card this month, would you be satisfied with selling it for $4 next month? Based on the amount of time and effort and energy involved just to find that deal, a $2 profit is not going to do much. However, on the flip side, if you invested in a $2,000 card and after a month it's gone up to $3,000, well, now you made only a 50% return, but $1,000 is good. $1,000 can pay your mortgage or pay off your credit card or buy groceries for the month. So the lower price the card is, the higher amount I want in return ratio-wise, just because I know that my time is worth a lot more than just a couple bucks. Now, as a caveat to this, as we go over the other factors involved, a $2 profit on a $2 card may actually be a good decision. The second factor is based on the upside potential of the card itself and the player. The more you believe a player is undervalued, a card is undervalued, the set or the variation is undervalued, the more ways you have to cover your own ass so you could hold out for a bigger profit. An upside could be as simple as having a serial numbered card of a great player that you believe will just climb in value just for the mere fact that more people are entering the hobby and you have a card that is just limited to 50 or 199. However, if you compare your card to another and you can't figure out why yours is selling for so much higher of a price, then maybe it's a good time to sell. For example, I was seeing a lot of that with NFL quarterbacks. Well, if you look here, the last Wilson Refractor PSA 10 sold for roughly 1/3 of the price of Mahomes Silver Prism, and his base Chrome rookies have recently sold for only around $600, or 1/12 of what the last Mahomes Silver sold for, in spite of the PSA pop reports having lower numbers for Wilson base Chrome rookie cards than Mahomes. Now, either that means Mahomes is way overpriced or Wilson is way underpriced, but regardless, a correction will be made. The point is that it's hard to justify prices going up when it's getting away from what's undervalued. And savvy investors like myself and like you are always looking at what's undervalued because that is what's going to go up. Someone like Cam Newton was the perfect example of a moderate risk, very high upside investment because his prices were very low, he was forgotten about, and all he needed was to be signed by any team for his values to spike. And it only helped more that there was no sports going on, so every headline got 3 times the attention, and the fact that it was the New England Patriots, because now it's Bill Belichick, it's a very strong system, it's a storied franchise, and he's replacing Tom Brady. But the point is that he never even had to play a snap of football or even be named the starter officially to see his values more than double in price. Also, sometimes selling for whatever profit is on the table is better than waiting for a higher and higher amount and it just never happening. The Last Dance documentary was a great example of this, because even though Michael Jordan is the GOAT, and I hope he's always the GOAT just because I'm biased to my childhood, we saw guys like Scottie Pippen and Dennis Rodman have their 15 minutes of fame, and their prices went from nothing all the way through the roof. Yet there were investors that bought halfway through the Last Dance documentary, assuming it would go up higher and higher, and it may never reach those prices except for just inflation of society, because there may not be another reason for them to ever hit that level again. While I made some good profit on selling Scottie Pippen raw rookie cards for 3 to 4x what I paid, I really miscalculated with Reggie Miller, because even though I sold 3 PSA 9s of him for about 3x what I paid, I bought 35 raw rookie cards of Reggie Miller for $8 a piece, and I was waiting for them to be at $40 a piece. I sold 2 of them for like 15 or 16 bucks, but now I have 32 or 33 just sitting there that, that money's just tied up, and either I try and break even and sell them for $8, or I just hold on to it. But regardless, I should have taken the profit that was there. The next factor to consider is the amount of copies of the card we have. And personally, I like investing in cards that I can get 5 of or 10 of, because then I could sell over time and I could test what the market wants, what that actual market value is. And one example would be my Rob Gronkowski rookie cards, where I bought 6 PSA 10s back in March for $84 a piece, and I've been slowly selling them at a profit in which I'm comfortable with. So the first one I sold for $225, next one I think was $275, and then the latest one $325, and now I have one listed at like $475. But the great thing is that if you have multiples of the same card, you'll never be kicking yourself for just selling that one card too early. Like if you only have one $1,000 card and you sell it for $1,500, and then you're like, yeah, this is great, I made $500, but then 2 months later it goes up to $3,000 and then $4,000, and you're like, damn, that's it. Like I made $500 and it's gone. But when you have multiples, you can really string it out over time. Another factor to consider is how emotionally attached we are to the card. Now, as an investor, it is vital that we do not purchase with our emotions, because then we will overpay. That's how people overpay on cars and houses. We've got to be very logical with our investments. However, when we love the player, when we love the card, it's a lot easier to hold on and not panic sell. That's why I love investing in Kobe and Tom Brady and Gronkowski and Shaq, because they're cards that I am not in a rush to sell. I love the players, they're all-time greats, and if they sell in a year, in 5 years, that's fine. If I just keep them in my personal collection, I'm cool with that as well. So there's always a factor of how much do I enjoy the card. And I remember buying a Pau Gasol rookie card because I saw it was like $2 on Beckett, and I needed free shipping, and it was selling for $8 or $10 on ComC. And the second I got that card, I threw that in the ComC pile. I did not even want to look at it. I can't stand Pau Gasol and how he played, but that's a card that if I had to lose money on, I would lose it, but I just don't want it in my possession. The next factor, which is perhaps the biggest, is opportunity cost. And that's because we need to know what we are giving up by tying our capital into this specific investment. Unless you have unlimited funds, we have got to factor in what we are giving up, because we are always playing a game of poker where we need to know what hand to play and when to fold and move on to the next one. As I record this, I have not sold any cards at a loss, but at the same time, I have a lot of inventory on ComC that I have not sold. There are low-end Jordan cards, they're the Reggie Miller rookie cards that are just sitting there, and that means that capital is tied up in those investments, and I'll never know where I could have placed that money before and what kind of returns I could have seen. But for me, as long as I'm learning and I'm getting smarter and savvier of an investor every day and every week, and with every move, I'm okay losing out from time to time. Sometimes we just have got to fold our hand and move on to the next investment. Pound the like button. Now, when we combine all these factors, it is obvious that it is not an easy process to determine what to sell a card for. That is exactly why I created this formula and the spreadsheet, so I would always have a better idea as to what I should price a card for. So let me show you the spreadsheet. So at the top, you just see year, set, player, the number of copies, the price I paid, and then it says event-based. And this is pretty much, is this investment based on a specific event like a movie premiere, a Hall of Fame announcement, or something like that? And then what is the date range of the event? And after that, if it is an event-based, then the rest of this is optional. But I put down player upside score, card upside score, pop report scarcity, risk or downside score, opportunity cost score, PC value as well, and a total score. And let me just go into the details because I have a little bit of instructions here. So if you go over here, you see, look, if it's an event, you put yes or no. If it's not, or if it is an event, you don't have to go any further because it's pretty much irrelevant. Then the next column is the player's upside score. The lower the number, the better. So if that player is very young and promising and the upside's high, then we'll put a 1. If not, we'll put a 3, or something in between. The card's upside score. Is this an upcoming set, or do you think that this set is not going to do much? So great upside, some upside, or little. Then the scarcity of the card. Is this very rare? Is it somewhat common, or is it very common of a card? And then we go down to what is the likelihood the card can go down in value from what you paid? Number 1, low risk. Number 2, some risk. Number 3, pretty risky. A lot of the cards I'm buying are $1 to $5 a piece, where it's low risk that it can go down even more from $1 or from $4. But if you're paying $300 for a Zion card, then you've seen it go down in value. Next one is, what are you giving up by holding the card? This is opportunity cost. So if you're still having hundreds or thousands of dollars to invest and this is not stopping you from making other investments, you put 1 for nothing lost, 2, some sacrifice, and number 3, sacrificing a lot. Like you're tying up all your capital into this investment, and that's important because we got to know what we're giving up. And then the next one, PC value, is what is your emotional attachment to the card? If you are fine with having it in your PC, you put a 1. Neutral, it's okay, number 2. And then strictly business, like my Pau Gasol rookie card, it is 3. I want to make a profit on it so I could put that money into something else. And then you add the total up. And it's simple as that. I mean, I have the formula in here where this, you see up here, the sum, it'll just create the sum of the 3, and then it gives me a score. And down here, you'll see that the higher the score, the worse. But you see right here, the higher the score, the riskier and more costly investment. 6 to 9 is ideal, 10 to 13 is typical, 14 to 18 is high risk. How you grade this is up to you. This is just what works for me. But then I see, okay, that's pretty good. 9.5, 9.5, 10. Okay, that means I can price it a bit higher because I believe that this will be, I don't mind having it in my PC, and there's a lot of upside. If this score was a 14 or a 13 or something, I would probably price it lower because I know that I'm giving up a lot and I don't want to have it in my PC, and it's just a riskier investment overall. So these are just a couple of example cards here. A select Drew Brees base card I got for $2.50. Topps Chrome Rob Gronkowski rookie card, Kobe Bryant rookie card. Here are the numbers of copies so I know how I should price it. This event right here would be probably where there's a 1-year anniversary of Kobe's death, as well as potentially the documentary coming out. Player upside score, okay? Like you might disagree with all these scores. It's just for me to interpret and make my own evaluation from it. And then I say, okay, well, here is the starting price that I'm good with. Here's the date I want to come back to this at, because maybe it doesn't sell in 6 months or 3 months or a year or whatever, and I want to come back and then reevaluate what the score is. Now, just going over this process helps me understand the upside, the downside of a player, of a card, and the opportunity cost, so I know if I should really price lower to get out and move on, or if I feel like I can wait on this because the upside is just too high. I don't want to take a small profit. Now, this layout works for me and my overly analytical brain, and if this resonates with you or it's something that you want to take for yourself so you could tweak it and make it your own, check the link below in the video description, and I'll try and remember to post it in the comments as well, where you can just download it and then you can add different criteria to make it a bit more unique to your own investing style. Let me know the process you use to determine what to sell your cards for. I'm very eager to learn and grow myself, and stay tuned for the next video. I'll see you over there.